When it comes to long-term dividend growth investing, I definitely know a thing or two myself, considering I've been basically obsessed with it and building out portfolios for around 7 years now. And just for some transparency, for example, this one portfolio of mine in one brokerage is worth around $541,000 as the film in this video. Now in this video, I'm going to explain to you why it's so important to reinvest your dividends into more shares of stocks and ETFs along your journey, even though at times I know it's going to be tempting to spend those dividends along the way. Now, if you're trying to build out a long-term dividend growth portfolio, make sure to stick around until the end of the video because you are going to want to see the math and how all the numbers work out. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So like I said earlier, this is one of my longer term dividend growth portfolios that's made up of different stocks and ETFs that all have a few things in common. Now, all these different positions in this portfolio all pay dividends as of right now, and hopefully most of them are going to be paying more and more in dividends over time. Now, for this specific portfolio, I started it years and years and years ago. I'm currently 31 years old, and I've reinvested basically every single dividend I was paid from every single last one of these stocks or ETFs over the past almost 7 years now. And what's pretty crazy is that at this point, this portfolio is not paying small dividends anymore like it did years back when I first got started. At this point, this specific portfolio is paying me almost $2,200 on a monthly basis if you were to average out all the high and low months as far as dividends go, because of course, not every single stock or ETF pays on a monthly basis. But that being said, every single time I get dividend income, whether it's a single stock like Apple or whether it's an ETF like QYLD, I get those dividends sent to my cash balance in this portfolio, and then I use that cash balance to buy more shares of different stocks or ETFs on an ongoing basis. Now, just to give you an idea of what some of those dividends look like specifically, here's an actual look at how much I get paid from just realty income as of right now in this portfolio on a monthly basis. And what's pretty cool in 2023, you can see that at the beginning of last year, I was only getting around $142 on a monthly basis from realty income. But over time, as I continue to get paid out dividends within this portfolio from different stocks or ETFs, I focused last year a lot on building out my realty income position. So you can see by month number 2, I was already up to $144 per month and then $157. So much to the point to where at the end of last year, I was earning $237 per month from realty income alone with this one portfolio. Now I show you this one example to really illustrate the power of reinvesting your dividends into more different stocks or ETFs. Of course, I'm not saying that you have to use your dividends to buy shares of realty income, but whatever your strategy might be, I promise you, if you keep buying more and more high quality dividend stocks and ETFs over time and just hold out on pocketing that juicy cash, because trust me, there's going to be moments in time where you just feel like you want to take the cash out of the brokerage and spend it on something fun, trust me. But if you just keep reinvesting into high quality dividend paying stocks and ETFs, over time you could turn that monthly dividend payments of say $140 per month to $240 per month within a relatively short amount of time. Now, the crazy thing is that if I just keep my shares of realty income like I have for another example, I'm currently getting around $240, maybe $250 on a monthly basis with this portfolio alone. Now, if I would have never bought another share of realty income early last year, I would still be stuck at $140, which again, I'm not saying is bad by any means, but you can see right here, because of my discipline and because of my constant buys over the last year, now I'm sitting at a point to where my dividend income is that much higher forever. But another way to illustrate how powerful it is to reinvest the dividends, I want to go through the dividend calculator and show you. With my specific portfolio that we just went through, this is all just estimations, keep in mind. But with a starting principal of around $540,000, an initial annual dividend yield throughout the entire portfolio, on average at around 5%, a 3% annual amount increase, again, these are all just estimations, a $1 contribution per year, which means I'm basically not adding another single outside dollar into this portfolio. But very importantly, with this example, we're going to be having dividend reinvestment turned on. All the dividends paid ongoingly from this portfolio are going to be reinvested into more shares of different stocks and ETFs ongoingly. So for this example, you can see the $540,000 portfolio earns around $27,000 or so per year, which again is actually pretty accurate. Now by year number 2, the portfolio is already up to $579,000 because of course the annual dividend amount is being reinvested into more shares of more stocks and ETFs, bringing the annual dividend amount up to almost $30,000 per year. Now 5 years in, this portfolio is already grown to $716,000 and around $36,500 per year in dividends. 10 years down the line, this portfolio, just going off these numbers, would be over $1 million and over $52,000 per year in dividends. Now, skipping ahead a little bit, by year number 20, $2 million of balance and over $100K per year in dividends, all from a portfolio that started at where it is right now at $540 with $27,000 per year in dividends. So I'm currently 31 years old, so by the time I'm 51, if I never added another dollar to the portfolio, I in theory could have a $2 million portfolio with over $105,000 per year in dividends, which would be pretty awesome. Now, all the way at the bottom, $4.2 million and around $214,000 per year in dividends. So once again, this is an example of dividends being reinvested. Let's go ahead and see what we get if we don't reinvest the dividends and take out the money along the way. So while the outcome is already showing that these numbers are looking much slimmer. So $540,000 day one and $27,000 per year in dividends. By year number 2, the portfolio only goes up a tad and around $28,000 per year in dividends. Now, as you can see here, the annual dividend amount increase goes up by maybe $1,000 or less a year, which again still isn't horrible because of the dividend amount increases, but really you're not allowing the portfolio to utilize the power of compounding by reinvesting those dividends into more stocks and ETFs. So much so to the point to where this portfolio would be over $1 million in 22 years, which is way longer than what we would see on the flip side. Now, you guys remember that the portfolio with dividends reinvested would be over $4 million in theory, and that's 30 years down the line. Now, 30 years down the line, only $1.2 million, which again, I'm not saying that's horrible. That's still pretty impressive, but just seeing what you could turn the portfolio into versus what it would be like if you spent the dividends along the way. Now, of course, if or if not you're planning on spending the dividends earlier or later, that depends on your strategy, your timeline, maybe how old you are, etc., etc. And I'm not saying that it's necessarily bad to spend the dividends along the way. If you want to buy into high quality assets and use the dividends to pay for bills, to travel, whatever it might be, by all means, go ahead and do so. But the math is the math, and as we see right here, with dividends reinvestment being turned on over the long term, we're seeing a massive amount of growth as far as principal and annual dividend income, which is going to be substantially higher than that if you were to spend the dividends along the way. So I really hope this gives all of you long-term dividend growth investors a little bit better of an idea of what it looks like if you are willing to put in the work and stay disciplined and reinvest your dividends long-term into the future, because I promise you, especially when you hit a certain point, you are really going to start to feel the power of compounding take off. Now, like I sort of mentioned earlier, if your specific goal is to get to a point to where your dividend income can pay for, let's say, one vacation per year, or let's say you want to get your dividend income to a point to where it can cover your cell phone bill. Maybe even over time, get your dividend income to a point to where it can cover your entire mortgage or your rental payment. Either way, I personally do not have any problem at all utilizing your dividend income and spending some of it along the way. But just know the longer you can keep investing that income that's being paid to you in the form of dividends every month or every quarter, the better your portfolio has a chance to keep compounding longer and longer and bigger into the future. But now I want to hear from you guys down below if or if not you are currently building out a long-term dividend growth portfolio. Are you currently using all the dividends and reinvesting them into more stocks or ETFs? Let me know in the comments, yes or no, down below. If you guys enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.